All right, so welcome back, everybody. This is the second. This is the second session. This is the uh, for the EzFx webinar. This is the second session, and it promises to be another amazing session. For those who were not around for the first session, relax. The recording is going to be made available on the group for everybody to review or to watch. All right, at their own leisure. So um, before the short break, we were looking into market structure. All right, because based on the poll results, majority of the people wanted to be taught on price action, market structure, crypto trading, and why they lose money trading forex. All right. So today is dedicated specifically to treating market structure. So we're gonna rush straight over to this to the whiteboard so that we can continue from where we stopped. All right. So before the break, I was explaining to us that the the foreign exchange chart, all right, or any commodity chart, usually looks like a series of um, unintentional waves, all right? It just looks like zigzags floating all around the screen. And I was trying to explain what that means, all right? When you watch the video for the first session, you might be able to understand some bits also of what I meant. But what I'm explaining majorly is the fact that the market is structured such that it's a contest, is a power tussle between buyers and sellers, all right? Buyers and sellers. Buyers are trying to enter into the market at the point where the commodity is at its cheapest. All right. Sellers are attempting to enter the market at the point where it's um, most expensive. All right. So that they can increase the profit margin. So what that means is that buyers look to get in from the low. All right. The best position for a buyer to get in is the low, and then the best position for a seller to get in is the high. That's how you increase profit margin. However, having said that, um, I know that for those of you who already have an idea of crypto trading, or you have some, maybe you've seen the memes, you have friends that are into crypto, and then you hear them talk about things like buy the dip, all right, buy the dip, buy the dip, buy the dip. Uh, it's simply still the same thing as what I'm showing us right now, all right? Buyers always look to get into the market from the low, all right? So I was showing us that the reason why the market looks like this zigzag waves all around is because the buyers are constantly trying to enter from the lows. The sellers are constantly trying to look for new highs where they can also enter and make profit. All right. So buyers want to enter and make profit. Sellers also want to enter and make profit. So it becomes a matter of who has the highest power. All right. The person with the majority of the power ends up winning the tussle. And in the foreign exchange market or in the commodities market, power is simply determined by one thing. Power is determined by liquidity. All right. Power in the commodities market is determined by liquidity. Let me explain what liquidity means. Liquidity simply talks about the ability to purchase. All right. That's all liquidity means. It's the ability to purchase, the ability to procure, the ability to buy things. All right. So that's liquidity. So if the sellers are more powerful than the buyers, all right, if they have more liquidity than the buyers, all right, you discover that the prices begin to drop. You have an example of such at a point like this. All right. From this point now, we observe that prices just dropped all the way down. All right. And the reason is because at that point, the sellers, or let me say the bears, all right, like I told you in the first session, the buyers are called the bulls, and then the sellers are also nicknamed the bear. All right. So we have bullish candles, we have bearish candles, we have bullish market, bearish market, and stuff like that. So at this point now, we see that the bears came into control of the market. all right? And thus they were able to drive prices all the way down, all right? And the reason is because when they start selling from the peak, all right, they earn profit all the way down, all right? Say, for example, I started selling I bought a commodity when, let's say, for example, the pair of shoes I talked about in the first session, I bought it for 4,000 naira, all right? And it got to a point where I just kept those shoes in my house, all right? I kept it for like 6-8 years, all right? And then 8 years later, these shoes are becoming 40-something thousand naira. They are starting to cost about 40-something thousand naira, all right? I bought these shoes for 4,000 naira. So if I'm going to start selling those shoes, the point where it has become 40,000 naira is the best point for me to sell, all right? It's the best point for me to start selling from. So when I start selling from that point, I'm able to make the maximum available profit in the market. All right. So like I was saying in the illustration in the first session, all right, say peradventure, I bought a commodity from this point, which I labeled as L1, all right, and then price increased all the way to H1. Say for example, you bought Bitcoin when it was $1,000 per Bitcoin, all right, and then BTC rose to 1,600. All right, BTC rose to 1,600. At that point where it rose to 1,600, there are people who bought from $1,000 who are beginning to feel like, oh, I have made enough profit. I'm not a greedy person. And this Bitcoin said, I don't know if it will still go higher than this. So let me just kukuma sell the small that I have so that somehow, I will not lose everything altogether. You understand? So I bought from 1,000 when it was $1,000 per Bitcoin. Now it is 1,600. I feel I should sell since I already made 60% of my profit. All right. At this point, H1, where that person begins to sell, I need you to understand that he is not going to be the only one who is feeling like that. All right. He's not going to be the only one who is feeling like that. It's actually the way he's reasoning that is the same way several tons of other people are also considering selling their own Bitcoins too. All right. And immediately they start selling, say peradventure Bitcoin drops to L2, which is about $1,200. All right. If BTC drops that low, there are some new people who are going to jump into the market because they feel like, oh man, did you see how Bitcoin rose from 1,000 to 1,600? All right. There are people who feel like that, like it just rose all the way from 1,000 to 1,600. Like, man, this thing has prospects. So when they see that it has dropped to 1,200, the way everybody is shouting, buy the dip, buy the dip, they jump in and they actually start buying the dip. All right. And that could take prices all the way to H2, which is probably, say, peradventure, let's say H2 is $2,200. All right. So based on this is how market structure works. All right. And that's why a foreign exchange chart is not a chart that just goes all the way up when it's going up and all the way down when it's coming down. All right. Because human psychology will always affect the market. Demand and supply will always affect the market. So the things that drive the forces of price are basically demand and supply, the forces of demand and supply. Don't worry, next week we're going to be looking at price action. All right. So when we start that session on price action, I'm going to be showing you some amazing things about price. But first of all, I need us to understand market structure so that we can become able to relate with any market chart that we see. All right, so that wherever you see a foreign exchange chart or a forex market chart, you can be able to interpret what is actually happening in that market per time. All right, so based on the liquidity principle, all right, the party with the highest liquidity ends up dominating the market. And this is simply how the foreign exchange market rolls. All right, so from time to time, there are times when the buyers have more liquidity, there are times when sellers have more liquidity, and then it flows both ways like that. All right, so there are times when it flows both ways like that. So the most important thing is to always ensure that you are on the winning side. All right, And that can only be possible when you have an acute understanding of market structure. When you have a proper understanding of market structure. I'm going to be showing you how candles begin to show us little bits of all of these things when we do price action. Under price action, we'll be talking about how the prices are represented, all right? Then how to interpret a price action chart and things like that. So we'll be looking into all of those amazing things by the time we come for next week's session. All right. But in the meantime, having understood how this moves, all right. Some of you, I know that you have experience, you've tried learning Forex from a mentor or whatever, but I need you to know that the emphasis at EzFx Academy is simplicity. All right. All right. Aman, I want to hear your question. It seems you have a question. Please drop your question in the comment section and the chat section. Let me, Miss Matstan, let me. Oh, okay. All right. I'll continue. All right. Thank you. So, based on this, the structure of this, when we look into price action next week, we're going to be talking about candles and all of that. All right. But I need you to understand that we are not at EzFx Academy. We are not interested in sounding mysterious. All right. We are not interested in making everything so bogus that you feel like, oh man, I'm learning so much, based on the fact that it's all sounding complex. All right. Our emphasis at EzFx Academy is to ensure that foreign exchange trading is made easy for everybody. All right. So our job is to simplify everything to the barest minimum so that you can sit down and comprehend it logically. All right. So that everything sounds logically comprehensible to you. All right. And that's what we're going to be doing throughout the period of this online webinars. All right. So having said that, I'm going to show us practical examples of foreign exchange charts on my screen. All right. So I'm going to go to some charts and then I'm going to show us all of this on my screen. Okay. So if you can see my screen, please let me know that you can see my screen. Or do let me know that you can see my screen, please. Okay, beautiful. Now, what you would observe is the chart is loading right now, so I'm going to explain something briefly. What you observe is that the movements in the market are not stable. All right. You see the outplay of what I told you about the tussle, the power tussle that goes on consistently in the market. All right. So this is it. This is me showing you an example of that. All right. You see that from here to here, we see that it was a downward move. It was a bearish momentum. All right. The market had a bearish momentum. So looking at that now, from this arrow that I just drew, who will you say is in control? Who will you say is controlling the liquidity in the market at that point? From the area where I drew my black arrow, who would you say is in power, or who would you say is controlling the liquidity in the market at that point? Please drop your responses in the chat box. Okay. All right, I'm still waiting for more of our responses. Beautiful. So obviously we are beginning to understand market structure. All right, so I'm going to draw a second arrow. So based on this second arrow, I'm sorry, I turned it the wrong way. All right, so based on this second arrow, who is in power now? Beautiful. So based on this understanding, this is just practically how market structure is formulated. All right. So
At one point in time, the bulls are in power. At another point in time, the bears are in power. All right. And that brings us to understanding price action. All right. Because when we understand structure well enough, we'll now be able to begin to spot areas where the powers of the bulls or the powers of the bears gets exhausted. Mr. Collins, were you at the first session? Did you attend the first session? And you're still finding it difficult to flow along with us? All right, just ask your question in the chat box. Let me know what areas are unclear to you. Just ask your question in the chat box, please. Mr. Collins, if you have a question, please, I need you to drop it in the chat box so that I can address it right now before we go on into probably more complex matters. Okay, while Mr. Collins prepares his question, okay. Oh, everything is like magic. Okay, Mr. Collins, I'm going to send you a video personally. I'm going to send you a video privately that would explain some basics of the things that I've been trying to explain so far. Don't worry about it. All right, don't worry about it. For the sake of everyone else, all right, I'm just going to run through the session right now, and then privately, myself and yourself can have a conversation. All right. So please, after this session, at the end of the webinar, please buzz me privately. Let us talk so that I can know how I can go about helping you. Okay, beautiful. What is our role in the market? Are we supposed to be bulls or bears? Remember, I told you that we retail traders like yourself and myself, we only make up about 5 to 6% of the market. All right. So we cannot be the ones to decide whether the bulls are the ones in power or the bears. All right. Our job is to simply flow along with the winning side. All right. When the bears are in power, we join them. When the bulls are in power, we join them. All right. So when the bulls are in power, we buy. When the bears are in power, we do what? We sell. All right. So do you understand? Do you have answer to your question now, Mr. Harman? All right, beautiful. So let's go on. So let me quickly interpret what's happening here to you briefly. All right, one thing you observe is the bears drove the market down. All right, then we see that the bulls came, drove it up all to this point. All right, let me mark that point. All right. So the bulls pushed the market into that point. All right. And then again, they did the same thing. All right. We see that they did the same thing around here too. All right. And not just there. We see that it was repeated about a couple of times. All right. Now, what does this tell you? This tells you that the bulls have been trying to push price. All right. They've been trying to make to push price higher than this particular point where I drew this bar. All right. They've been trying to push prices higher, higher, higher. However, we see that from this particular spot, it's almost as if that's the spot where the sellers are sitting and lying ambush for the bulls. All right. It's more like the bears are lying ambush for the bulls around this point. All right. Such that at the point where the bulls exhausted their liquidity, all right, at the point where the bulls exhausted their liquidity, You see how the bears instantly took over the market. All right. You can see how the bears instantly took over the market and drove it all the way down. Do you see that? Please let me know in the chat box if you understood what I just explained right now. Beautiful. Who else understands what I've explained so far? Okay, I will recap briefly. All right, so looking at this chart, all right, let's look at this chart from the start. All right. You see that the bulls were in control, all right? They drove prices all the way up. All right. But when price got to this particular area, all right, we see that the bears had their liquidity overpowering the liquidity of the bulls. All right, which means the bears had more purchasing power, they had more liquidity, and as a result of that, prices dropped. All right, then the bulls rather gathered liquidity again and pushed prices upwards again. Are you with me? And then we see that from that same area, the bears came back in control and pushed prices down. All right. And then we see that the bulls, they gave us another bullish run from this point. All right. So we see that the bulls gave another bullish run up to this point. And we see that they tried within quick succession twice to go above this level because, like I told you, as price is increasing, those who have bought from the point where it was cheap. Let me give you an illustration. Bitcoin was once $1,000. Peradventure, if you bought when it was $1,000, right now it's about 50 something thousand dollars. All right. So if you had bought since when it was $1,000 and you still had your Bitcoin with you currently, all right, it would mean that the value of what you have has appreciated. All right, the value of what you have is increasing. Are you with me? But say peradventure, if you bought Ethereum when Ethereum was 750,000 naira, all right, there was a point where it's dropped to 500,000 naira. If you were still holding on to your Ethereum at that point, it would mean that the value of what you have has dropped. Oh, Bitcoin is now $48,000. Interesting. It should be approaching $33,000 anyways. So, um, so as it goes, when you want to enter a selling market, you enter it from the point where it's at its highest, so that as it is dropping, all right, you will know that you no longer have it with you. You have already sold your own when it was still expensive. Are you still with me? You already sold yours when it was still expensive, before it became too cheap. All right. So that's how buyers and sellers interact under market structure. All right. That's how they make up the market. All right. So from what I'm explaining, you discover that when the bulls pushed price up to this area, every single time they pushed price into this area, it always dropped. All right. But you need to understand that every time they push price upwards, all right, what they are expending, they are using their liquidity. Are you still with me? They are expending liquidity. They are using their liquidity, their purchasing power, to continue to try to push prices up. All right, to continue to push prices up, because increase in demand causes an increase in price. All right, and increase in supply causes decrease in price. So when the demand is increasing, prices increase. All right. So you see that the buyers are constantly imputing demand. They are buying, and trying to push price beyond this bar. All right. However, they were unable to. Are you with me? So it got to a point where their liquidity got exhausted. All right. The liquidity of the bulls, the liquidity of the buyers, it got to a point where that liquidity got exhausted. All right. And immediately that happened, what do you see that we have in the market? You see that the bears took over the market completely, and they just rode it all the way down. All right. They just rode it all the way down. This understanding of market structure is what gives rise to support and resistance trading. All right, is what gives birth to support and resistance trading. When we start looking into price action, all right, you begin to understand these things much more easily. All right, much more easily. So quickly, Mr. Aman, do you still have a question, or does anybody still have a question pertaining what I just explained, please? Beautiful. Mr. Aman, I am impressed with your questions. You have amazing questions. So I'm going to address Mr. Aman's question briefly. He said, what is the best time to become a bull or bear? All right. The answer is simple. Remember, I told you in the first session, I said, buyers make the highest profit margin when they buy from the lowest price. All right. And sellers make the highest profit margin when they sell from the highest price. All right. So when we start doing price action, I'm going to be showing you how to. Can you please mute your mic? If your audio is on, please mute it. All right. Beautiful. All right. So beautiful. Like I was explaining, I said, so when we start looking into price action, we're going to be looking at support and resistance. All right. We're going to be looking at support and resistance. We're going to be looking at demand and supply. So when we start looking into these topics, all right, when we start looking into these aspects, that is where you now begin to know clearly when is the best time to become a bull or a bear. Because the truth is, whatever it is anybody is going to teach you on the forex trading, all right, no matter how much the person charges you, no matter how long the duration of the trading, the major thing they will still teach you in forex trading is that question Mr. Arman just asked: when is the best time to become a bull or a bear? When is the best time to buy? When is the best time to sell? All right. That's the best, that's the highest thing anybody can teach you in foreign exchange trading. All right. So if you understood my answer so far, can you please let me know in the chat box that you understood so far? Does anybody still have any questions? Exactly, Mr. Hammond. You will have to predict it. But you see, that's where analysis comes in. What we teach in EzFx Academy is how to predict your point of entry, the point of entry up to 88% accuracy. All right, we have a system, we have a strategy that guarantees at least 88% accuracy. That means if you take 10 trades, all right, at least 8 of them will end up in profit. All right, so that's what we said. If you're going to take 100 trades, 88 of them is going to end up in profit. So that's what we teach at EzFx Academy. However, it is not going to be completely free. The purpose of this free class is to expose people to the basics of foreign exchange, all right? However, when it comes to teaching the precise details of how to enter the buying or selling market, all right, that will be at a price. However, I'm going to try my best to lay a foundation, to lay a framework such that even if you want to go ahead from here, you feel like, oh, this guy is too boring. I don't want to pay him to learn Forex from him. Oh, this guy, I don't like the way he talks. His English is not too fluent. Or maybe you feel like, oh, my class is too expensive. I don't want to pay such amounts for a class. All right. If you feel like that, I will personally guide you to YouTube channels where you can go and watch YouTube videos. I will even personally send you courses, video courses of my friends that have also done trainings, all right? And then I will send it to you and leave you to decide for yourself, all right? Because I remember when I started learning Forex, I've spent well over $1,000 learning Forex, all right? And not just learning, but learning and also experimenting, all right? So that's basically it. So I want to know if any other person still has any other questions that we need to address. Does anybody still have any questions, please? Yes, liquidity can be predicted. You see, when it comes to predicting liquidity, that's where it might not be possible for you to understand that right now, all right? But let me just try to explain as simply as I can. When you talk about candlestick analysis, all right, there's something called candlestick patterns, all right? There are candlestick patterns that begin to show you pictures of when it's seeming like liquidity is about to get exhausted. Under those kind of candlesticks, we have the pin bars, we have hammers, we have shooting stars, we have dojis, we have aramis, we have engulfing candles, we have all those big names, all right? But like I tell all my students, don't get carried away by the names, all right? The information you're asking for, Mr. Aman, is an expensive information, all right? So if you're going to get it for free, you're going to need to be very patient. However, it is easy to get without, if you want to, if you want to pay the fees, it's very easy for me to explain everything to you and get you to understand it. It's no issues. But liquidity can be predicted, all right? That's part of your job as a foreign exchange trader. All right. Does anybody still have any other questions, please? All right. Mr. Aman, don't worry. You can always send me a DM so that we can talk privately. Um, I would um, I will try my best to um, guide you to a friend of mine on YouTube that might be able to provide answers. My YouTube channel is currently not active right now because I barely have time to make new videos, but I'll direct you to a friend of mine so that you can follow up on some of his videos and get the answers that you need. All right. Does anybody still have any other questions, please? You're welcome, Mr. Hammond. Does anybody still have questions, please? Hello. Does anybody still have any other questions that they may want to ask? All right. It seems nobody has questions. If you don't have questions, please kindly type in the chat box. No questions from this end. No questions from me. No questions from me. Quickly, let me see that right now. What time frame is best to enter a trade? The answer is simple, but also complex. There is no best time frame to enter a trade. All time frames, you see, you must be able to understand trading in a way that all the time frames are speaking something to you. All the time frames are saying the same thing to you. All right. That's how I teach my students to trade. All right, such that there are no best time frames. If you check the trades that I've been posting on the group for a couple of weeks now, majority of those charts are trades that I took from as low as sometimes 1 minute time frame, sometimes 5 minutes time frame, sometimes 15 minutes time frame. All right, but I don't, because I enter from the 1 minute time frame does not mean I did my analysis on the 1 minute time frame. All right. If I'm entering from the 1 minute time frame, there are times when my analysis is actually starting from the daily time frame or the 1 hour time frame. All right. So let me show you an example of a trade like that. Should I? No, don't worry. I would probably send it as a screenshot. I don't want to. I don't want to. I don't want to oppress anyone. Let me put it that way. I don't want to oppress anyone with my trading results. But having said that, there is actually no best time frame. All time frames, you must learn how to cause all time frames to work together for your good. all right, such that they all say the same thing, they all imply the same thing, all right. So any other questions, please? Quickly, I would like us to just give a rating on today's class. I need you to drop it on the Telegram channel. We're going to wrap up today's webinar here, all right, because my detailed class, like my people in Yoruba land will say, they say "Ọbẹ̀ tó dùn, owó ló pa," which means a soup that is sweet, it's money that kills it. All right. My detailed class on a regular basis costs 100,000 naira. That's how much I charge for my detailed class, which is $200. However, the reason why I'm having this webinar is because I want to give you some value for free so that you can trust me with your money. All right. If you need a discount, I am willing to provide a discount. All right. But that's the usual fee that I charge. So you should know that for me to be doing this completely for free is because it's out of the good nature of my heart. All right. So I know you are shocked. Don't mind me. Don't mind me. I used to train people for $1,000 before, when I still have physical classes with people. Okay, my outlook on XAU USD. All right, I'll drop that during the week. Please do well to remind me also. Having said that, please, I would appreciate it if we could just drop a comment, a review, a feedback about today's session on the Telegram group. The reason why I'm wrapping up now is because I'm actually a little bit disappointed because we are about 100 on the Telegram group and only 13 of us are available for this session, which is a little bit discouraging, all right, which is one of the reasons why I don't enjoy doing free things, all right, which is one of the reasons why I actually don't enjoy giving free value. But I still don't mind. So I'm using that to say, please invite your friends to the Telegram group. Let them know that they are missing so much. What I'm dishing out here is quality. All right. What I'm dishing out here is serious quality. I have friends that will never even do such a thing for free unless you're already a paid student. All right. But I'm doing this for you for free. So please bring your friends on board. I'm going to wrap up the class here because I'm hoping and trusting that we would get a better attendance or a better turn up over the next session during the next class. So please do well to invite your friends, do well to invite anybody that you know at all has a question about Forex, all right? I'm going to be treating all your questions about Forex, any question whatsoever. Drop it in the Telegram channel if there's no webinar yet. If there's a webinar, sit me down and then we talk about it, all right? So I'm going to wrap up here. Please drop your review of the class on the Telegram channel. Drop it on the Telegram channel, not on the chat, so that those who didn't attend can know what they missed, all right? So that those who didn't come today can understand that they actually missed out on some beautiful value, all right? So once again, to wrap up, my name is Ogunkunle Adetala. I am a foreign exchange trader. I am a crypto analyst. I'm a risk assessment trader and analyst. I analyze for about 4 different investment firms. And I want you to know that during the course of this webinar, you are in absolutely safe hands, all right? I'm not going to take your money from you without your consent or without your permission, all right? If I'm going to take money from you, it will be because you gave it to me willingly, because you were convinced that you should, all right? So on this note, I'm going to say thank you so much, everyone, for attending. I really appreciate your presence tonight. Please do well to invite your friends, invite your relatives, invite your acquaintances. Let them know that something big is about to happen, all right? So next week, we look at price action, and I want to say thank you all for attending, and God bless you. Have a beautiful rest of the weekend. God bless.